In this video, I'll show you how Chicken Genius earns $10,000 a month using this option strategy. I'll be demonstrating it on Interactive Brokers, so by the end of this video, if you want to follow this strategy, you can follow it step by step. If you aren't sure, Chicken Genius Singapore is one of the top finance ex-YouTubers in Singapore, and I take a lot of inspiration from his content. This is one of the old videos I saw recently of how he shared he earns about $10,000 a month, and I would like to break this down in terms of how it can be valuable for you in terms of learning, in terms of your trading and investment journey. If you're unsure, my name is JJ. I share the practicalities of options trading in terms of giving you an additional income in a no bullshit manner. I want to paint a realistic picture when it comes to options trading. Sometimes when you hear people like Chicken Genius says he earns $10,000 a month, right? I think it's necessary to share a lot more nuances to that, because throwing keywords like $10,000 a month USD, right? It's very enticing to people, but I don't think it helps people paint a realistic picture. For context, I'll play a clip of his video and then I'll elaborate it in detail on Interactive Brokers.
I'm using options to profit sideways, no leverage and maximizing time decay. So I just set aside 100k each stock and it roughly brings me $10,000 a month.
The most important thing he says is to set aside 100,000 USD per stock. The riskiest thing is to trade with leverage money when you have no track record of handling it well. This $100,000 is meant to act as a buffer in the case where you're forced to buy stocks from options trading. Long story short, the strategy that he's using is selling cash secured puts options. And if you're unsure, I've made a previous video on this. Link of it is in the video description. First things first, you need to set aside 100,000 USD per stock. To many people, this might not be a small sum of money, and that's the key thing I feel like a lot of traders don't talk about, because Chicken Genius Ken himself is too advanced, right? I'm guessing his net worth is about 20 to 30 million. $100,000 is not a lot of money to him. One thing I'd love to caveat, right? If $100,000 is a lot of money to you, make sure you adjust this strategy accordingly. Maybe you don't have $100,000, maybe use $10,000 instead. The most important thing that actually I would love to emphasize in this video is that it takes money to make money. This $100,000, ensure that it's not a huge part of a portfolio. If $100,000 USD is all you have got, right, I would not recommend you using this tactic, because there is a small possibility where if big shifts happen in the market, you might potentially lose all of that temporarily. Another thing to make sure is that you are trading with no leverage. Make sure you trade with money you have. Never trade with money you don't have unless you have a good 4 to 5 years or even 10 years of trading where you can reliably prove that you won't lose money. So the next step is to wait until the stock is in a consolidation phase and moving sideways. So let's go to the Tesla stock. Never use this tactic when it's on a downtrend. Always use this tactic when it's on an uptrend or going sideways. So as you can see here, Tesla right now for the past few months have sort of been going sideways. So you can say that maybe this is a good time to sell put options on Tesla. Then you sell at the money cash secured put options. You should have enough cash to take allocation if necessary. Wait until expiration. So let me go on to Interactive Brokers right now. I am using the paper account. Once you're in Interactive Brokers, click the stock you want to trade on. When he says here maximizing time decay, I'm guessing that he's selling put options at about 30 days to expiration, because that's the time duration in which the options value decay the most and you can earn the most amount of money within a relatively short period of time. The tactic is to sell at the money cash secured put options. You're choosing the strike price closest to the actual price of the stock. The actual price of Tesla right now is at $252, so selling at the money put options would be at about $250. If I want to sell a cash secured put option, I'll just click here, sell. Make sure you click sell, don't click buy. Okay, when you're buying put options, that's an entirely different thing. Click order. If I sell one contract here, I'm promising to buy 100 Tesla shares at $250 each, and this promise will be valid until the 26th of January. There are 33 more days to go before this option expires worthless. On the 26th of January, there can only be two outcomes. One, the price of Tesla on 26th of January is above $250. If it's above $250, I get to keep all the cash I collected from selling these put options. Let me click preview right now. If I were to sell one contract of Tesla at $250, expiring on the 26th of January, I'll collect $1,313, and that's for one contract. Going back to the second scenario that can happen, right? If the price of Tesla on 26th of January is below $250, whatever the price is, whether it's $230 or even $0, you have to buy 100 Tesla shares at $250 each. In this case, you'll then need to spend $25,000 to buy 100 Tesla shares. Why $25,000? If one Tesla share is $250, 100 Tesla shares is at $25,000. And because you have set aside 100,000 USD to trade using this tactic, you can take 100,000 divide by $25,000, which is 4. If you want to follow what Ken does when he sets aside $100,000, you can trade up to 4 contracts. In layman terms, you must promise to buy 400 Tesla shares at $250 because 400 Tesla shares at $250 is $100,000. And if you sell this promise, you'll immediately collect $5,257 as stated right here. This is actually not $10,000, right? How does Ken actually reach $10,000 a month? And this depends on how many stocks you're trading this tactic with. Another stock that he likes to trade this tactic with is Rivian. Same thing, click on Rivian, click on options, click on about 33 days left. And if I were to check the price of Rivian, it is at $23.21. It seems like Rivian has increased quite a lot in the past few weeks. I'm not a big fan of trading this tactic right now because I can't really prove that it's moving sideways. If you do trade this, it's a little bit more riskier. But nonetheless, if you're to trade this tactic on Rivian, maybe you'll choose the price of $23 or $22.50. Again, one contract simply means that you promise to buy 100 Rivian shares at $22.50 each. For one contract, you must be ready to fork out $2,250. So if I take $100,000 divided by $2,250, that's about 44 contracts. So if I put 44 contracts here, make sure you click sell. If I click preview, I will collect about $6,259. If you take $6,259 plus the $5,000 plus you collected from Tesla, this would mean you're earning about $11,000 to $12,000 USD a month. Then again, I must reiterate and emphasize, right? He has set aside $200,000 in the case where the stock price of Rivian or Tesla drops a lot because these are companies that he feels that are of value, and at the same time, there is a high implied volatility. The higher the implied volatility, the more premiums you will collect because IV simply means how volatile the particular stock is. The more volatile, the more riskier it is, and therefore the higher risk, the higher the reward. There's one other thing I would like you to take note of, right? If you were to sell a cash secured put options way below $23, right, you then collect lesser money. So let's say I sell a cash secured put at $17. I will only collect about 0.15 times 100, which is $15. So if I promise to buy 100 Rivian shares at $17 each, I'll only collect $15. If you're selling a put option closer to the actual price of the stock, you'll then get more premiums and earn more money accordingly. So it's a little bit more riskier because the chances of you paying that money for the particular stock is a lot higher, but there's a lot more high rewards as well. So he's using this $100,000 per stock to generate him active cash flow, which is very, very good. If you have not watched my video on how to sell cash secured puts, be sure to watch that. If you are ever allocated and forced to buy the stock, right, there's another strategy you can use, which is called covered calls if you are allocated the stock itself. So I'll leave those videos in the video description. Please let me know if you have any other questions, and I'll see you in the next video.